Hi, my name's Scott from Precision Wealth Management, and today I'm going to talk to you about a strategy that we often use with our clients called debt recycling. Debt recycling is where you replace your non-deductible debt with deductible debt. Okay, so what we've got here is two scenarios. The client owns a house that he bought 5 years ago. The mortgage on it was $300,000. 5 years later, it's worth $600,000 and the mortgage is only $250,000. So there's a fair bit of equity there. What he wants to do is use the equity in that home to buy the home that he wants to live in for good, the family home. All right, now what he wants to do is use that previous home he lived in as an investment property. So what will happen there is he'll have a $250,000 loan on the $600,000 investment property, and his own home that he bought for $800,000, he's going to have an $825,000 loan with stamp duty costs there. In scenario 2, the same man sells his home, gets about $335,000 cash from the sale, accounting for agent fees and paying off the loan. He uses that cash to buy the home, his family home, for $800,000 again, uses the cash to pay stamp duty and ends up with a $490,000 loan. He then uses the equity in that new home he bought, equity release, and purchases whatever he would like, but another investment property for about $600,000 net of fees. Okay, now what that does is it gives him greater flexibility in choosing what investment property he would like to purchase, what area, what price, whereas this option, you're stuck with what you've got. Okay, the other benefit of this is that investment loan is deductible debt. Now his home loan is non-deductible. So over here, you've got a home loan much smaller than the investment loan. Over here, you've got a home loan much higher. Now what that means for your tax return is that you'll get a tax deduction if you're on a 34.5% marginal tax rate, interest rate around about 6.5% per annum on your loan, your tax deduction will be about $16,000 over here, leaving you with a tax saving of about $5,500, which is not too bad. Over in this scenario, you'll get a $39,000 tax deduction, leaving you with $13,500 tax saving. Now that's about $8,000 a year better off doing this strategy, right? The debt recycling strategy. Now there are transaction costs which can be upwards of about $40,000 to buy and sell a property. So agent fees 2.5% on the $600,000 loan on home would be about $15,000. Stamp duty about $25,000 on the $800,000 house. Now that $40,000 would be recouped after about 5 years of doing this strategy. So again, you should invest for the long term. If you would like to look at a debt recycling strategy or would like to talk about other investment options, please get in touch. Thank you.